Hello guys,
Today we're going to be doing a daily analysis on the Nasdaq and what we saw today, what trade we took today, and what happened after the trade. Okay, so to do a daily analysis, I like to work my way back from the higher time frame to the lower time frame. So on a higher time frame, we're on the weekly time frame right now. We see that we have been bullish. Monthly, we have been bullish. Weekly, we've been bullish. And daily, we've been bullish. So it's clear and obvious that right now we are in a bullish market. Today we had PPI news, which impact the market pretty good. And we don't want to trade the news, but we want to look for setups after news, after the release, to see what happens or what price wants to do after. So this is what happens. On the weekly time frame, we see that price has ultimately been in a bullish uptrend, worked its way down, took out all this liquidity, sell side liquidity that's resting below here, took out all of it, okay? And it tapped into this weekly bullish order block, respected it, started working its way back up. Right here, lower highs, higher lows, higher highs, higher lows, and then it pushed up right here. Okay, so right here, bam, there's a market structure shift. After it broke this high right here, create a market structure shift, telling us that market is moving direction now, pulling back up to the upside. So what do we see on the upside that needs to be filled, attacked, kissed, tapped into, whatever you want to call it? What do we see on the left side right here that gives us a reason for price to run up there? Well, first of all, we have all these lower highs right here that have buy stops resting above them, buy stops and sell stops resting above them, and price wants to go target these highs right here to take them out, of course, because it doesn't want us to keep profiting for as long as possible. Of course, price wants to attack us and make us lose our mind and lose our money. So this is exactly what it's wanting to do. It wants to take out these highs right here, and that's exactly what it did. First, it took out this high right here, creating a market structure shift, and then after it did that, it took out this high. So once it took out this high, we're confident that price wants to keep taking out the rest of these highs. And the move that caused this large move down right here, we see that there is a fair value gap resting above here, marked with these two horizontal lines. Fair value gap, this is the opening of the fair value gap, it's the closing of the fair value gap, okay? So price is obviously trying to go right here and balance this weekly imbalance. And above this weekly imbalance, we have relatively equal highs, meaning that there's buy stops also resting above here that price is drawing to take out. So in a bullish market, targeting this weekly imbalance, we know that we can find a buy entry, a long entry. So let's work our way down. On the daily time frame, price is continually moving upwards, creating higher highs, higher lows, higher highs, higher lows, lower highs, higher lows, higher highs, right here. This is just an accumulation right here after this displacement. It's accumulating more orders only to continue moving upwards towards that weekly imbalance resting above here. Okay, so that's what we have on the daily time frame. On the 1 hour time frame, it's continually moving forward. This is beautiful. This is beautiful. So where would you look for an entry? You know, you already have a frame for your entry. You have already framed your entry from the higher time frames, weekly, daily, 1 hour. We already have a frame of where we want to go, what we want to do, and where price is wanting to go, which is up into this weekly imbalance right here. Okay, so going down to the 5-minute time frame, 9:30 opening is right here, this area right here, 9:30 opening. We have a large push up, okay? What did it do after it pushed up? Created equal highs. A lot of buy sells first thing above here. That it is desperate to attack, because that's what smart money likes to do. They like to attack these traders that sell that set their orders right here. Pulled back into our order block and then continued making its way up. Okay, we go down to the 1 hour time frame, 1 minute time frame. Get rid of this right here. This is that 9:30 opening right here. Price went up. Oh, where'd it go? Pushed up, pulled back into discount zone, only to continue its way forward. Okay, so how did my entry look like today? Well, my entry, this is why I took it, and here's what I did. Okay, I saw this 9:30 opening right here. What happened when I saw this opening? I was like, oh wow, price is going to move forward. Price is going to keep going higher. It's going to attack this fair value gap that's resting above here on the weekly time frame. Okay, I don't want to miss this move. What is this called? What does this sound like to you? Because to me, it sounds like FOMO. Okay, FOMO. I entered right here. My mistake. Because I didn't wait for price to come back into discount zone to the mean threshold of this order block to keep moving forward. Okay, I took this entry right here when it tapped back into this small little fair value gap right here. This is where my entry was, about right here. Okay, now here's what happened. Price, in order for it to move up, it needs to move down. Okay, that's exactly what it did. It made its move up, pulled back into our discount zone on the 5 minute time frame, which is still the same discount zone, fair value gap right here, pulled back into this discount zone, disrespected this fair value gap, only to reverse back up and continue moving to the upside, because we are still bullish. In a bullish market that's bullish on the monthly, weekly, and on the daily, we don't want to be looking for short positions. Okay, so this right here is just a manipulation move to manipulate traders into thinking that it's going to keep moving lower now, when in reality all it's doing is pulling back into a discount zone, accumulating more orders so it can continue its ultimate push higher. And that's exactly what it did. Higher high, higher low, into discount zone, optimal trade entry. If we take our fib from this low, I like to go to the bodies, not the candles, because they're more accurate. Oops. Let's go right here. Create our higher high, pulled back into discount zone, tapping into our optimal trade entry zone right here. Only to accumulate orders and make its ultimate move higher. So that's exactly what I did. So on days like this, when I take a wrong trade, it doesn't affect me. Yes, it happens in trading. You're going to win some, you're going to lose some. If you lose a trade, but you had the right idea, then the trade just was not a good trade. It was just not it was not an accurate entry, or it was a wrong entry. Like today, after every trade I take, whether it's a win or a loss, I journal it. Today, this was what I wrote down in my journal. I had the right direction, but the wrong entry. Right direction, wrong entry. Should have waited. Stop loss was hit, because here's where I placed my stop loss. It was hit only for a price to continue making its way higher. So what could I have done differently in order to succeed on the next time? Instead of FOMO, entering on FOMO right here, wait for price to make its pull back into the discount zone in order for it to accumulate more orders to continue making its ultimate move higher. So I would have entered right here, taken my partials at this high right here, move stop loss to break even, and then while price kept moving higher, I would have just trailed my stop loss, kept trailing my stop loss until I get stopped out. So that's what I like to do. It's fun. Also, I'm not losing anything. It's a risk-free trade and it's fun. So thank you for tuning in. This is what we have today for July the 13th. I'm not expecting any good setups tomorrow, but we're still going to look and see New York session Easter time and wait to see what happens for next week. So thank you guys for tuning in. I will see you guys later.